Hi guys, and welcome back to CashBright, your guide to investing in an ever-increasingly uncertain financial world. Facebook, the social media behemoth, has had its fair share of controversies. The harvesting of personal data by Cambridge Analytica for use in political advertising, or rather fake news, was initially met with strange silence by the company's CEO Mark Zuckerberg back in 2018. When he eventually addressed the US Congress, he portrayed a company that was apologetic of its complacency and stressed the need to protect users' privacy on the platform. Fast forward to the middle of 2020, and a new controversy has arisen surrounding Facebook and its perceived lack of oversight and control over hate speech. A campaign known as Stop Hate for Profit has called on big blue-chip companies to boycott the social media platform and its advertising revenue during the month of July. This boycott is presumably intended to put pressure on Facebook to change its ways and tighten up its policies to, if not eradicate, at least significantly reduce the level of offensive posts made by users of the site. Such calls almost invariably fall on deaf ears, but following recent events such as the Me Too movement and the protests against racial injustice following the unlawful death of George Floyd at the hands of US police officers, companies such as Pepsi, Starbucks, Unilever and Verizon would be remiss not to spot such a furtive opportunity to acquire additional brand equity. These companies have therefore responded by throwing their full support behind the movement by suspending advertisements on Facebook during July. So what does all of this mean for Facebook's stock? Well, on the surface, the first thing to note is that so far, this has not had the effect many predicted on the company's stock price. Whilst the stock fell from a high of $242 on the 23rd of June to a relative low of $216 on the 26th of June, the stock regained much of that loss by early July, where it was trading around $233. This resistance in the stock price could be explained by reports that more than half of the companies that advertise on the platform are small and medium-sized businesses, and that even if these big companies pull out, the effect of Facebook's revenue would be fairly small. Some have questioned whether it is really in fact the case that these big companies need Facebook more than Facebook needs them. Still, the company's stock has seen its ups and downs since 2018, and this volatility is reflected in the stock's 5-year beta score of around 1.2. But the long-term prospects are good, and although it is important to remember that past performance is no guarantee of the future, it is worth noting that investors were rewarded in the past for sticking with the stock, even following the much more serious negative publicity event of the Cambridge Analytica scandal in 2018. Zuckerberg himself has said he's not worried by this boycott, and has remarked that it actually poses a small threat to Facebook's revenue stream. Overall, I believe this is certainly a stock to watch, and possibly to buy, particularly if the price falls further during the third quarter due to jittery investors selling their position on account of further unfavourable publicity. The company though is likely to come through this one way or another, and once we are through July, I would not be surprised to see big companies creep back in to resume advertising on the platform. As always, there is some degree of risk in buying this stock, and this is something which you should weigh up yourself. But in my view, Facebook is a solid stock to buy for the long term, even when considering the realistic prospect of further price volatility in the not too distant future. Thanks for watching. If you found this video to be helpful, please leave a like and don't forget to hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.